Makes me not want to use Facebook anymore. Do I sound pretty good though? Do I sound clear? Okay, YouTubers. He got rid of it, whatever it was. I hope. Thank God I wasn't in a trade. Could have fucked my count up there too. I ain't gonna be able to sleep tonight now. Let me see, get back over here. Okay, well, everything's running normal. I can't get no voice. I gotta go through here and speaker high definition. Chick, are you on mute? Yeah.
Around that, in the context of the comparison between AMD and NVIDIA should still be winning.
You're absolutely right. It is not ridiculous, and I totally take that back because I agree. I mean, I think that this is where the mismatch to me of like the fundamental story, and to your point, maybe it's just
It
more
did
of
sound like a guy from India.
But I agree. I think that the bullishness is still there. You also can make the argument this is the cheapest it's been on a historical average, on a forward-looking PE basis right now in 5 years. So we're trading at like 25 times in a forward PE. That's actually cheap, not even just cheap for NVIDIA. So there's definitely reasons to be optimistic. Now, to go years and look
what
at
a trip.
where the note today out of Jeffries is saying actually that NVIDIA is continuing hold on a minute, they're eating their lunch. I mean, I think a stark contrast and even our enthusiasm tied to NVIDIA is everything happening with AMD right now.
Yeah, AMD under some pressure right now, down 4%. This off the back of an update from Jeffries. They're downgrading their view on AMD. They're no longer constructive on it. They've moved to neutral. They've got a hold rating on it now. They've lowered their price target now to $120, which still signals some upside from here, but that's down from their previous view of $135. And a lot of this has to do with the competitive landscape. They did some performance checks. They see that NVIDIA is still the leader over AMD's M1 300X, and so they think that that's actually that leadership gap that's going to expand even further than NVIDIA.
Well, we had a knife when I was gone.
With both Rubin and Blackwell.
I know, and that I think is a great reasoning because I think that that's sometimes what is missed is like the complexities of their infrastructure for the next now like 4 years we know. And
I don't know how long I was off the bed. I'm really freaking out.
I'm like is unknowns, but that's definitely not really been the case for NVIDIA. Where I do.
I gotta stand up and go pee, eat some cottage cheese, do something, take a shit.
For AMD, we have I know a stronger year-to-date performance, but the last several years look a lot different. And now to look at Alphabet here, also with a more pessimistic note from the sell side, Guggenheim with a reduced price target. Although Alphabet here still hanging on to at least a 12-month gain, which is as optimistic as this chart can get.
Yeah, so it's under a little bit of pressure, down by just shy of 1% off the back of this. This is just them lowering their price target. They still have a buy rating on Alphabet, so it's just kind of a re-rating of what the value should be from here. So they still see more upside, just not the same degree that they saw before. So Guggenheim lowering their price target on Alphabet to 190 from 215. Part of this has to do with just they see some softness in the advertising environment, and so they see that impacting YouTube especially, and subscriptions there, and so they're just slower demand they see right now, and they're expecting that trend to continue in the second quarter, so they see that denting Alphabet a little bit. So again, they're still constructive on Alphabet, just lowering their price target.
Okay, and Alphabet, I will say also in stark contrast to our next name, actually has a forward PE right now of 18 times. Microsoft, and this is what's wild to me, Microsoft has a higher PE than both Alphabet as well as Nvidia at now 28 times, which actually many would still argue is pretty, relatively speaking, cheap for Microsoft here. But Microsoft, with some news, more regarding OpenAI, but yeah. I do think that this is interesting that it's now our only Mac 7, I believe, that's lower on a 12-month basis, where it's moved to the downside. This year has now dragged it. I mean, and maybe we didn't have the performance in 2024 to back this, but now lower on a 12-month basis, the only one of the Mac 7 that can say that.
Yeah, it's true. It's certainly struggled, and especially even if you look at last year, how it performed compared to the rest of the Mag 7. And this has to do with, obviously, OpenAI. We know it's a big investor in OpenAI. This according to a Bloomberg report that OpenAI is nearing finalizing this round of funding, $40 billion, as we know.
Okay.
They've got several investors reportedly in the group.
Did you miss me?
There. And so this would be a very large investment. PitchBook seeing this as this would be the biggest of all time. So, and it could potentially value that company at $300 billion for OpenAI, which would be double its previous valuation. So that's a big move there. But I wonder if, in terms of the overall weakness that we're seeing, just a choppy action around Microsoft, if that's just because of the broader downbeat sentiment that we've seen, especially given how the Mag 7 has performed so far this year, or in the context of the overall weakness that we've seen.
And as we speak, we saw Microsoft give up its modest gain on the session. So now
magnificent. Give me a grade.
Lower by any means, but
for virus control.
The Microsoft jinx, unfortunately, is things still look right now like they're holding up too well in the overall tech space. We'll obviously be keeping that on our radar, though. We'll be looking more at our upvoted names today. The compare and contrast between Nvidia and AMD, both names right now lower on the session, but we'll dive into the technicals as well as some example trades in both of those semiconductor tech-focused names coming up next.
That was quite scary. Man, I didn't trust the guy. I couldn't hardly understand what he was saying. I'll wake up tomorrow and all my accounts will be drained out.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close.
Who's XD?
No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support.
I'm back, phone, Jake Paul. I'm here.
And in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
We're going to slap some calls. Welcome to the room, Em.
Investing, it's now time to dive into the technicals as well as some example trades on two of the largest names in tech, NVIDIA as well as AMD. Joining us now for our honorary chart master of the day is Kevin Horner, Senior Manager of Trading Services at Charles Schwab. So Kevin, thank you so much for joining us today and helping us look at two names I'm sure you're just a tad familiar with. We'll start off with the small mom and pop shop being NVIDIA, which I have to say, we need your technical help here because I haven't been more frustrated in the stock's underperformance in quite some time. It's just a mystery to me given all of these still enthusiasm for AI.
You're not wrong, Jenny, honestly. And I appreciate you having me today, obviously. The move we've seen of late, it's been difficult.
Yeah, I just had me a little virus attack. I didn't know what to do. We're hitting the 200 EMA right now. So I have to kind of settle back, and I'm going to go take a piss and come back here. I don't think I've ever been so scared in my life. I mean, this computer is my lifeline. And I didn't know if I screwed it up forever or what. I didn't know. I said, oh no, man. I mean, I got a nice computer with a bunch of monitors on it. This is my setup here. And I got scared of the guy, so I shut my computer down to get away from him. And he calls me up on my phone. I'm going, and I hung up on him first time. I thought it was another spam call. So the second time I said, hello? Oh, do you need me? I'm going, shit. Nancy, give me a shot of vodka and a bottle of rum and 3 Valiums, please. Make sure I run a scan. That's a good idea. You would think it would automatically do it because I got a nice one. So I use moving averages. I guess you might not, or you already know that. If I was here, I would have probably called this bottom here. We had another snake. I don't know how long I was gone. I had to have been gone every bit of that. Man, I'm so full of fluid and shit, I'm scared to death. We hit that 200 and that would have been an exit idea. So we got to wait to see if it wants to break it, and that's the SPY. I got a headache. Jeez. Like I said, I need to eat an orange or something. I can't tell you, I ain't had a virus in years. Damn Facebook. I hope I did the right thing.
To be fair, but I mean, walk us through the story here.
Okay, I'll be right back.
More
I'm
and more
gonna go.
analysts are just saying.
I think I'll make another hot chocolate. I'll fatten
I hear
myself
the
up.
same thing, obviously. I'm getting all of the same commentary that you are, and yes, the chart doesn't look fantastic. As we'll see, we've been writing that 20-day moving average lower. Each of my bubbles there are tests and rejections at the 20-day moving average. Well, just last week, we got that pop over the 50-day, and it just didn't live, right? It lasted all of 3 days, and now it looks kind of like an island to itself, doesn't it? At the 105 level and above, up to 115. But so you got two things that are working out here, right? You've got matching highs at the 115 level instead of higher highs, so you don't have full bullish bias at this point, of course. But the chart is shifting and acting differently. Having held the 20-day moving average now for 2 full weeks, at least short-term bulls can tell themselves a story. There's something different happening. What once was resistance at the 20-day moving average could now potentially offer support. And so we've digested negative news. Is it a good chart, a good candle today? Absolutely not. But if you're of the mindset that what has changed in the last 2 weeks from price action is something that can provide lift in the short run, even if it's only to the 115 level we just saw, well, then there's still an opportunity for a trade to be made here if you believe in that semblance of bullishness. So yes, it's bearish in the short run, or the longer term, excuse me, bullish in the short run. The real question is, can we hold the 102 level in the 20-day moving average approximately? That could give bulls a short-term opportunity here for an upside trade.
Okay, so I like that because I think that encapsulates everything we've seen recently in tech, and that there's still some winners on the year, even if they haven't looked like winners for, I mean, the several quarters, which has somewhat been AMD's case, but also like an Intel, a Micron. I like some of these comeback stories. So, I mean, do you think that right now this chart still has any degree of that recipe for success to like ride through this momentum, or do you look at the longer term picture and say, well, we've been punished here before?
That's the question, of course, right? Do we do what we've been doing all along? And we can't say that what we've been doing all along is what's apt to happen, only because the last 2 weeks is different than what we've seen, right? The last 4 instances where we got above the 20-day for 2 days or 3 days, we were quickly rejected. Now, that has not been the case now, right? Yes, we're back below the 50. It would have been fantastic to hold the 50-day. But many traders would perhaps just suggest that the weakness we've seen today and yesterday is the semblance of the space, the industry of semiconductors collectively, and it's being dragged down. Additionally, one of the things that some traders will look for is getting bad news like a downgrade and starting still to act favorably after the fact. So when you start to digest what ultimately should be negative news and you digest it with positive price action, that can be a bit of a heads up and a tell for traders as well. So maybe not necessarily today, but if we can at least get some semblance of test of support, validation of the 20-day moving average as support, there could be that opportunity here. And that's why the trade that I built is going to be a bullish trade rather than a bearish trade.
Okay, I like that. Giving me some optimism on this like dreary, sad day in tech, and it's dreary in Chicago. I need some enthusiasm here, even though of course AMD, like we both mentioned, down about 3.8%. But walk us through your example trade.
Tesla pulled back pretty hard.
AMD, well, we have seen not great price activity on the year. We're up still now 6% this month.
Yes, absolutely.
Watch Tesla again.
The fact that we've got a good low in, again, Higher lows
Man,
in price matter, and so that's what we're going to be looking for here. But once more, recognizing the range that we
That kinda
traded in,
sucked.
I ballparked it as about 102 to 115. I wanted to work within that range, and so what I built was a
I don't know.
102.
Makes me want to go out and buy another computer.
Long haul vertical, a $10 spread that we'll see.
Just to have one on
can
the
be
side.
implemented, at least when I built it, was available at $5. And of course, when we do these $10 spreads, and you're purchasing
Tesla's pulled back here to
contracts,
support, but I don't know if I can trust it
your
right
back-
now. Let me shut him up for a second. Tesla's getting to the 200, so we're going to see if it's going to respect the 200 SMA here. Is there any stocks you like? Welcome to the room again, if you're still here. Jimmy get AIDS while I was gone? Randy, I got a virus. Yes, I had AIDS. I mean a bad one. And I clicked a thing on Facebook about reading messages. You missed this message and that message. And still having a hard time breathing. I know it ain't funny. They wasn't even looking at porn sites. Makes me not want to use Facebook anymore. Okay. I was talking to a girl that my nephew's wife, she started a cleaning business and I've been helping her kind of get it started. Okay, we're getting ready to come to support here on Tesla, so watch this. Let me see here. We got a 1, 2, 3 on the SPY. So I've been kind of helping her get business and teaching her what she needs to do to get in business, get her license and get insured, and how to clean windows. I kind of like that spot there better. Go ahead and shoulders. I've had two major businesses, picture frame shop, and I had to go through all that, and then my cleaning business. I'm gonna go make my chocolate, but I think we're about ready to take one here. Any bad news come in while I was gone? Negative GDP growth is more likely than not. Russia, Putin says geopolitical rivalry has heated up in Arctic. U.S. has long-eyed Greenland. So, Trump Secretary pick Paul Akins tells the U.S. Senate he will definitely work for Deutsche. That's good news. Zelensky says U.S. stance regarding Russia should be stronger. Zelensky says U.S. stance regarding Russia should be stronger against Russia. Regarding Russia. Well, that don't make no sense. Yeah, I don't know if I could be trading anymore today. I'm too. We got an inverse head and shoulders here when we're coming back, touching the right shoulder on the SPX. I'm going to clean this up. I really thought I lost my computer, man. Do you have any investment? See, yeah, it's none of your damn business. What time is it? 12:30, so the fat cats are back. Okay, I'll be right back. I'm gonna get my hot chocolate made and maybe get back to. Tomorrow I got to meet one of the owners of the buildings that I'm doing. I'm gonna eat a banana. Gotta have something to eat after that excitement. So we got another resistance to break here. Where's Mike when you need him? Caroline, where were you when I needed you?
Yes, despite the fact
I needed a
today
hug.
it's up about 11% this week. I think it's important to note shares are still well off the highs.
Can you give me a hug,
Over
baby?
40% off the highs, so maybe that means the bar is lower. You know, there is some policy premium built in maybe this week, but we saw a lot of it erased.
I love you.
So, you know, if you take a look, it's still up about 55% over the past 1 year. It's up, down 30% plus. Year to date. So I think that, you know, that's kind of important to note in terms of where that bar is. But if you take a look, it's always been very mixed with analysts. 48% of analysts still in the buy camp for
I
Tesla,
really do
about
love
30%
you.
in the hold camp. The median price
I need a
target is
vacation.
5, right around there. So the majority of analysts
About three
think Tesla has
or 4
room to run
days.
to the upside. But you know, there could be some hiccups. We'll have to see next week when it releases those delivery
We'll
numbers.
have to see. if
Sooner
there's
the
some
better.
Bumps in front of us when it comes to Tesla. You know,
Good fun.
and shares still holding on to a gain right now, though, up a little more than 1%.
Okay, we're coming down to the
Rivian also gained
shoulder line one more
well
time.
today as the
Now, what do you think? You think we're going to hold it?
as least exposed to the auto tariffs. All right, we'll have to leave FOMO there today. Tesla
I'm liking the
advancing.
57
Send it back to you over there
tens.
in the studio in Chicago, Jenny.
Yeah, thank you both for that great discussion on Tesla here. But now, coming up next, it's time to shift gears. We'll talk one of the last
I think we're
earnings
gonna
days
hold
we'll
it.
really discuss, and I keep saying that, we keep discussing earnings. So Lululemon earnings out today after the closing bell. Shares are up modestly on the session here after now pulling back about 26% roughly on the year.
Get it on, Jimmy. SPX 5710s at $3. And a lotto means same day. March, today is the 27th. Let's get it on. Strike 5710. And there's $3 right there. We still got to be very careful in this market until April 2nd. $3. I'm going to buy one. I bought one. Set a tight stop. Yeah. Set a tight stop. Oh, I didn't get it all in there.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern.
I bet you nobody missed me when I was gone.
Trading
Randy.
is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets
It's all
are
fake
closed.
news.
All
It's
on our
phony stuff.
award-winning Thinkorswim
It didn't happen.
platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading
Mike?
specialists ready to help.
And
How
where were you?
complex the strategy?
Where were you when I
All
needed
range of
you?
Opportunities. You can trade brilliantly with Schwab.
No politics, no noise, from bell to bell.
No, you didn't
and
get to
beyond.
see it. I
Schwab
don't think.
Network is available anytime,
One of us
anywhere, on
made it
any
broke
device for free.
Whatever you do, don't look up at porn
Schwab Network.
on the computer.
Welcome back to Next Gen Investing. It's now time to focus on the athleisure space with Lululemon earnings due out today after the closing bell. Of course, one of the last names in our major earnings cycle, but they keep coming. So there's definitely still a lot to like and a lot to parse through within the retail world. But joining us to discuss more on what we can expect from the athleisure world as well as Lululemon is Tony Sapparo, the CEO of Equity.
He says-
Tony,
says,
thank you so much for joining us today.
"You've been
And
looking
we'll
at
start off
porn?"
with Lululemon specifically, what are your thoughts on this report? I've seen
No.
nothing but actually optimism them as far
Not
as
me.
like, top line expectations. But there's just this looming threat of athleisure right now. Feels like it's under such pressure with the tariff conversation.
Yeah, absolutely. Glad to be here and couldn't agree more. When you see that bullish optimism from every corner of the market, it makes you actually a little bit weary. I think on the report, you're going to see good earnings. You're going to see
Anybody
strong
take the
earnings
trade with
growth,
Bobo?
even potential guidance. But like you're saying, I think there's a lot of overhang from tariffs and even just pressure.
I just
on
got
the
one
market
contract
that
here.
Make it maybe only a
So we got
moderate
two
buy,
resistance
right? Don't go
levels.
crazy here. Maybe
We need to
nibble
break
a
this
little
one.
bit, and kind of wait to see. But I think when you're also comparing Lululemon to a couple other key players like Nike
Damn.
and On, I think they're relatively stronger. But
I
again,
feel like I
it's
really don't want to
following
go
price action.
out of my way
We've
on
had
this
a huge
trade.
rally up to in Lulu,
But if we can break the
420
21.
or so, and we've traced quite a bit of it.
I'm
And so
sorry.
I think it's
I gotta let you go, sir. If you're new to trading, just get in and out of these trades at first. I was at 370 there for a second. So we got two overhead resistance levels we got to break, and I think if we break them, I was at 370. Now we're back to 310. I'm having hot chocolate stock virus. Man. Someone made a gross error. Come on, hold this support level.
One of us has made a gross error.
I did. Don't ever click on.
Affirmative.
Don't ever click on a link on Facebook.
Affirmative.
Three o'clock break. I'm back down to 3. I'm debating on adding another one here. And see if we're going to squeeze out of this or. Tomorrow's Friday, so we really got to be careful. Which Tesla's moving up yet? See Tesla bounce off that 200 on the 5-minute with a tweezer bottom, correct? Yep. How dare you?
Danger, danger, Will Robinson.
Blanket. Spy's still in the flag. And what else? NVIDIA. I gotta watch my trade here. Let's see if we get another bounce. Oh, Lulu tonight. So let me give my prediction on a Lulu. First, we're going to look at the monthly, 15-year monthly. Well, I'm still watching my SPX. Lulu's very yearly candlesticks. Supports at 320. Needs to hold to stay bullish. Wonder when I did that. So let's get rid of that. Earnings after close, huh? I can keep that one up. That must have been during the last earnings. Oh, we're at $4. Thank you very much. Now we have what you call 3 white soldiers. So we could consolidate here and pull back. And I'm going to take profit because that's what I do. Should I hold it, Mike? Say yes or no. So what I demonstrated here was an inverse head and shoulders right to the 60.
I cannot accept that course of action.
Oh, I'm out. I did it. Against your best wishes. You got to understand, I don't mess around when I'm in a frenzy. Out at 4:30. Thank you very much. A profit of $130. Magnificent. You can give me a grade. No, that ain't gonna work. Finally a good trade for me. you little sneaky snake. You've been snaked. Shooting star, I got an A+ on YouTube with a big A, not a little one. So let me...
I cannot accept that course of action.
Oh, I did.
That does not compute.
It did.
Nothing for you.
So this is what you call an inverse head and shoulders. And this is a very important thing to know right now. You might have an initial breakout on the first shoulder, but it can always come back and retest. And that's the sweet spot of the inverted head and shoulders. Just the opposite of a head and shoulders, which you see right here. You see what I'm saying? You had a head and shoulders here and it pulled back. You have it inverted right here, which means that's bullish sign compared to a bearish sign. So as it came back and hit, it created that trend line. You see this here trend line. Then I had another one right here. So as it came back, it retested 3 different times. And that's where my 1, 2, 3 comes into play. 1 bis, 2 bis, 3 bis. Oh, here we go. Now we're at 480. How disgusting. I should have bought a couple of contracts. Now we're at 5. Oh my God. Is that why I got a small A? Oh, we got a tough chick in here. You told me to stay in? Well, I didn't see it. You didn't tell Jack. I'm glad I'm not your mailman. Oh, well. Well, as I was saying, you had 3 white soldiers, and what's Jimmy say? They always come back a little bit after the 3rd soldier. It stopped at the 3rd one, and then boom. We could have a continuation. God, I feel good. I feel really good now because I didn't lose my computer. And Microsoft saved my life, I hope. I just don't like talking to an Indian here and he's trying to tell me, you need to do this and you need to do that. You don't need my help, then I'll move on. And I'm going, oh, shit. That ain't no way to be talking to me. I'll come over and whip your ass. He said, no soup for you. Okay, Randy, should I get back in the trade? Yes or no?
No soup for you. Affirmative.
Sue says it's best to wait at this point.
Affirmative.
I'm going to ask her why. She used to be one of my favorite fans.
It's all fake news. It's phony stuff. It didn't happen.
I asked her why. See if she's got an answer. Well, let me tell her something. If you can count to 3, you can trade with me. But if you can count to 4, you just might make a little bit more. What do you think about them cookies? Three black crows, baby. I'm doing it. You can't stop me. 260. The 5710s. Uh-oh. 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 We've came back and touched the right shoulder this time. We need to bounce. So I'm going to add one more. There's not a thing you can do about it.
Danger, danger, Will Robinson.
SPX calls, scalping the lotto. Today is March 27th. And the strike is 5710. at 260 and 220. If you can count, this is the second right shoulder touch. Booyah, mommy yay. Be careful, Francisca. If you got one winning trade, don't ruin it. You got something you can tell your hubby now. He'll be proud of you. He'll cook dinner for you tonight. You miss Hillary? Hillary. Break it. Hickory dickory dock. The mouse ran up the clock. Let's see if this can really break out for me. Share this trade with Miss Vegas. Oh boy. Oh, what happened? Let's cancel. I think my average is at 240. You know, I talked yesterday about me having the worst day of my life, and losing my computer could have been a lot worse. I would have to be absent from you all, and that would have been horrible. I don't think any of you would have survived without me. Maybe Sparks. Can you imagine me not being around and how empty your lives would be? Oh shit. Okay, here's my Cox health. Right when I'm in a trade. Always clean this Jim, Howard. Yes, ma'am. Oh, good.
She said if there's no improvement after 7 days, because 7 days is the longest you should use it, she said if there's no improvement after that, she recommends that you make an appointment with her.
Okay, I can do that. Okay. Yep. It's improved a lot, actually, from day one, from before.
To now?
Yeah, to now, yeah. Yeah. But I'm not supposed to use it a lot, right?
No, like if you have no improvement after you start using it, if there's no improvement after 7 days.
Yeah. Okay, thank you very much, ma'am. I really appreciate it. And I will make an appointment soon anyway. Just to get I've been on a different diet. I want to check my blood. So I'll catch you later. Thank you very much. Bye. Okay, we're at $3. I think I know what to do here. Randy, spit it out. I did not make a gross error. It's quite volatile here. Now, the volume just kind of picked up just like that. So I don't know. I'm not going in big because I'm kind of shook up. So I'm just taking little baby steps right now. Just to show you that the game goes on. Em, what kind of music do you like? You like my voice? That's true. A-I-O-U. We're at 3:30. Now we're hitting the 50 SMA. One could make a business decision, but do you see another resistance on here? Either get out at the 63 like I did before, or you might make a little bit more with a 1, 2, 3 triple top resistance. But I will get out. And I did. There's not a damn thing you can do about it. Right here, 350. I did it again. Jim, you made a gross error. You should have held. I can hear it now. Tariffs again. On the first day of Christmas, my true love gave to me 2 calls at 5710, 1 at 260 and 220, and out at the 63. I don't know how I do it, but I do it and I get away with it. The 63 EMA on the 1 minute time frame. Can you hear me now? This took years and years and years to get these moving averages just right where I want them. Magnificent. A+, please. Uh-oh. Oh, I was going to show you the next resistance. 380. Are you kidding me? Right there. We are at the next resistance right now. If we break this, we're going to the moon. Damn, man. You know what $4 would have got me? $320. Instead of 210. 220. So this is a resistance. If you count to 3, you can trade with me. So let's look at the big picture. Damn, $4. So you got your left shoulder, your head, and your right shoulder And then we came back for the second time and hit that right shoulder. So this could break out to the upside big time if we break this 1-2 Phoebus. Now your neckline is right here. We can run it all the way back up to that head and shoulder line. 450, you've got to be kidding me. I don't think that's very professional. God damn it. I left another $200 on the table. I said the bad word. Where's my Bible? I'll be right back. I can't believe I said that. I haven't said that word in years. 520. $560. Eternal life. Life that begins the instant a person turns from sin in commitment and trust to Jesus Christ the Lord, the Savior. John 3:16. $5.90. I'm really fed up now. I said it would go bigger, didn't I? 630? You got to be kidding me. I'm going to have a heart attack. Hello? Hey, you dumbass. Didn't I tell you to hold that and take it to the 200 EMA? What the heck's wrong with you? You just left $280 on the table, you stupid. I left more than that, sir. I left 400. I never was good at math. Oh well. Oh yeah. Rob, don't tell me you stayed in the trade, because I don't want to hear it. La 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 la. Jim, you make it look so easy. Not yesterday. God, that's $800 I left on the table there. No, it ain't. 600. With just a $480 investment, I left $600. That's a 100% trade. I didn't leave that. Yeah, I did. That's almost 600. If you can count to 3, you can trade with me. It would have been better if I took it with you. I know it. Don't forget that. I'm your knight in shining armor. Oh boy. Well, as long as we stay above the 9, we're still good. If we break this, I might just jump in more. But we got the 200, so that could give us a few. Spies at the VWAP. Spies at the VWAP. Dadgum, man, that thing's at $7.10. That's disgusting. There it is. Your exit ID at $7.60. Now I'm really upset. I left $800 on the table. I think M is a good luck charm. Boy. I think I'm going to go out and have some tacos tonight. Although I don't really need to be eating. I've got to get ready to look good at the beach. God, look at it, 840. Oh, Jim. No. I just left $1,000 on the table. Just in that little run. From here to here, I left $1,000 on the table. Just in 2 calls. And that's why I like trading this SPX. I mean, ching ching. Since I started trading the SPX, I could almost say I've made more money than I have in the 18 years that I traded. That's no joke. I gotta go turn that water off. I'll be right back. So get ready for the new song. Time for music. Time to light up your ears with some harmonics. I haven't played this one in a while. This is one of my favorites. Tiny bubbles in the wine make me happy, make me feel fine. Tiny bubbles make me warm all over. Feeling that I'm gonna love you till the end of time. So here's to the golden moon, and here's to the silver sea, and mostly here's a toast to me and me. Tiny bubbles in the wine make me horny, make me feel fine. Make me warm all over. The feeling that I'm gonna love you till the end of time. Always clean. Retail traders. I'm in the middle of a recording right now. Call me back in a half hour, baby. And I'm gonna love you till the end of time. How'd you like that? Unbelievable. Play it again, Jim.
That might not happen again because the super cycle definitely hasn't. And if you look at valuations on Apple, it's still expensive on a forward-looking basis compared to historical norms, too. So, with that being said, they still have weakness in China. Maybe the iPhone SE helps out there, that lower price entry point, to get back at some of the competitors over there that have been taking market share from them. But we did see some bearish activity in Apple. It's one of the only Mag 7 names that's positive today. Out in the April 4th weekly cycle, so just 8 days to expiration, the trader bought 5,000 of the 215 strike puts, paid an average debit of just about $1.61 on those, so the break even of $213.40 or so about there over the next week is about 4.5% below the current share price. So this could be somebody hedging a large stock position. It could be a speculator saying, okay, why is this stock up when everything else is getting hurt? Are they going to be able to avoid tariffs? We're going to hear some more about reciprocal tariffs next week. So Apple might be in the crosshairs, and this trader thinks it's going to go lower over the next 8 days.
And I don't feel like the SE did particularly well. I know it was the cheaper model. I didn't feel like it was a big seller, but as to your point, maybe a lower price point may do well in Asia in the competitive landscape. And the foldable phone, I saw some teasers about going back to the days of old where it folded, so that might be cool. We'll see, but you made a great point. We got a lot of promise at the Worldwide Developers Conference.
Yes, we did.
That did not necessarily come to fruition. So I guess
You promised me you'd call me back, and you never did.
No risk, neutral to bullish.
Yeah, the stock's under pressure here today, down about 2%, off about 18% so far this year. And those all-time highs that we saw last June of about $148 a share, we're down over 50% from those levels. Now, this might be competition. It might be pricing. They did just come out with a new pricing model where you could order through their pharma front, their storefront, and pay only $500 for the same drug. I think it costs $1,200 here in the U.S. as far as Wegovy goes. That's good. They're going to make that available globally at this point. But you got to start thinking about the tariff impact, because the president said, you know, he's going to tariff autos, he's going to tariff other items, and he did mention pharma, and that's going to be up to 25%. So maybe that's why we've seen that weakness in the shares. They did say, the CEO did come out during one of their recent speeches and said the copycat compounders, say that fast 5 times, are hurting Wegovy sales. They may take legal action. These compounding pharmacies like Him and Hers are allowed to make legal copies of Wegovy and Ozempic, but they're not that semi-glide to that Wegovy and or they nobody noticed developed at this point. So they might take legal action there. So a lot of headwinds for this stock, but at the same time, valuations have come down pretty significantly there. But they might be named next, on the second here for reciprocal tariffs as far as pharma goes. So that's a concern. But we did see somebody probably taking advantage of the pullback that we've seen in there. We saw a put
Hims is at a support.
May monthly option.
If we start to rebound, well, we got
so 50 days to expiration.
price lowered to $22.
8,000 of those 60 strike puts. Collected an average credit of about $1.39. So the break even where they start to lose money is 58.61 over the next month and a half or so. That's about 16% below the current share price, with put volume about 3 times normal daily average.
Yeah, better wait on that.
Yesterday on Options Corner, Nicole, is people are taking advantage of these sell-offs in individual stocks in the market and selling cash secured puts like this trader is doing with the expectations, hey, if the stock stays here, goes higher, even goes lower, but stays above my strike, I get to keep that credit, or they're willing to buy the shares at a lower price point. And in this case, for this trader, that's 16% below the current share price. So taking advantage of the pullbacks and higher implied volatility.
Okay, understood. And that volatility, and when you talk about Hims and Hers and the compound that people were using, it seems that at least part of it, to your point, was going to be put away because now the supplies of the real guys is available. I mean, that's the big story. And so Hibbs is down 30% this month because of that compound story. So very interesting. And Novo on pace for the lowest close since March of 2023. So great to have this options trade here today. Tom White, thank you very much. Great to see you. Always on Options Corner. He looked at Ford, Apple, and Novo Nordisk. Coming up next, Paul Hickey to give us his thoughts. We'll break down the divergence between hard data and soft data. We've been talking a little bit about that, but why it matters. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to
That
trade,
was a good call.
Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities,
It's very complex.
you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on
I'm
Saturday,
Kevin Hickey.
weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I bet he's never had a hickey in his life. I personally don't like him.
Welcome back to the Watch List. I'm Nicole Petalese. We're live on the floor of the New York Stock Exchange. I want to welcome in Paul Hickey, co-founder of Bespoke Investment Group, to give us his insights into this volatile market and where we could be headed. Good afternoon. Good to see you, Paul. Some of your thoughts.
Hey, Nicole, how are you? So, I think, what the market's been contending with lately is whether or not the policies of the Trump administration, the herky-jerky tariff announcements that are on again, off again, will translate into a meaningful economic decline.
Oh, yeah?
And there's a real dichotomy in the data between the hard and soft data. So soft data, like yesterday's consumer confidence report, that came in horribly, and Michigan confidence has also been very weak.
Oh, shut
and
up.
at levels that in many cases would be considered recessionary.
You wouldn't know where a
that's
bottom
the
was
bad
if it
news.
slapped you in the
good
face.
news is that we haven't seen this translate into the hard data as of yet. We saw new home sales, housing starts, building permits in the last week all come in line with or better than expected. Industrial production, capacity utilization, durable goods also better than expected. So we've seen that data come in good. Even jobless claims, where we constantly hear that the Doge cuts are going to cause a pickup in joblessness. They've been better than expected the last 4 weeks, not by a large margin, but they're hardly falling off a cliff at this point. So,
Exactly.
We haven't quite seen that transfer from the soft to the hard data of weakness, which I think is a good thing.
Yes.
Right, understood. My concern too was about the earnings season is going to begin, and that the CEOs and companies would sort of
She's a
play
good
it safe
listener.
and not give any kind of great
Understood.
news ahead, but be a little more conservative, and that could then hurt sentiment further. I don't necessarily love that scenario, but is that a possibility?
Yeah, so we're going to have earnings season come up in starting about 2 weeks here. And so it's interesting because we've seen estimates come in pretty decently because of fears of this slowdown in activity from these tariffs and trade policies. So, but that's in most of the weakness, again, has been in the soft data rather than the hard data. So you have the potential for some surprises coming into earnings season where expectations.
Apple's at resistance at the pivot point on the 20-day 1 hour.
The way I think about it, and when I talk to people, they're not expecting anything positive to come out of this earnings season. So whenever you see that, the bar is set low, and it's all about at the margin. So if we can see results come in better than expected, I think that'll be a positive. There's, like you said though, there's no incentive for companies to give positive guidance going forward. But if there's not a big uptick in the pace of companies lowering guidance, that's something we could hang our hat on.
And look, I mean, if they're somewhat tariff proof, I'm sure they're going to be noting that, if they're more at home here, they'll probably tout something like that. So that could be interesting as we start to hear more and more companies say how the tariffs may or may not affect them. Maybe it won't be as bad as some people think. That could be a bright spot. How about Tesla? What does Tesla signify to you right now in the Tesla story, which has been wild, but has been moving back higher? It's up 11% this week.
Yeah, so it's interesting to look at Tesla, and it's a case in point when you're watching the market. For instance, when you see stocks fail to rally on good news, that's a red flag. So Nvidia, for the last 6 to 9 months, you've seen multiple periods where there's been good news, stock pops, and then immediately reverses. In the case of Tesla, we've seen a lot of bad news. The stock has declined about 50% from its peak. Earlier this week, you saw that European car sales were down 40% year over year in the first 2 months of the year. That's a staggering decline.
Oh, shut up.
And yet, the stock was higher that day. So when you start to see stocks start conversely rally on what's bad news or stop going down on bad news, that's a good sign. And what's really fascinating about Tesla is despite that over 40 or 50% decline from the peak, it's still up about 11% since election day. And that means it's outperformed 80% of all S&P 500 stocks since election day. So as bad as the last couple of months have been, it's been a reversal of what was a real, exuberant period post-election. And we're just getting back to setting recent back to a baseline level.
Look, I think it's almost tough for people. They got a little spoiled with over 20% gains 2 years in a row, and then they say, oh, the S&P is down this year, the NASDAQ is down this year. Maybe, your thoughts for year end. I had a guest on today who had a 6,900 target for the S&P 500 by the end of the year. That was on the higher end of most of the folks that I've been speaking with. Where do you think the S&P could be headed between now and the end of the year, or even a year from now?
Yeah, so I think, like you said,
134.
Back-to-back 20% gains. We saw over 50 new highs in the S&P 500 last year. The S&P never traded below its 200-day moving average for the course of the last year. Those things are very uncommon. And as we wrote our year-ahead outlook in the beginning of the year, we said don't expect those types of gains going forward. We weren't necessarily looking for the sharp types of declines that we've seen, but I think this has helped us to reset sentiment for the rest of the year. Look what we've seen. We've seen one of the fastest 10% corrections from an all-time high on record. The 6 other ones that we've seen in the post-World War II period where we declined over 10% in the course of a month from an all-time high, the S&P was higher, regained those former highs within 6 months 5 times and came within 1% within the next 6 months of those former highs the other time. So you do tend to see a snapback while there could be more volatility in between. And as I just mentioned about sentiment, you look at the consumer confidence report yesterday. Well, 2 things I would notice there is, even though that report was very weak, the jobs plentiful index and the jobs hard to find index, you didn't see any big movements in that. So the labor market hasn't shown deterioration in the last month, according to consumer expectations and perceptions. But you look at stock market sentiment, the percentage of just regular consumers looking for the stock market to decline over the next year is 44%. It was one of the largest 1-month increases on record. And think about it, the market usually goes up every year about 75% of the time. So if you're expecting the stock market to decline more than if 40% of people.
I wasn't paying much attention to that, but we're back up to the top again.
Those prior periods where we've seen that sharp uptick in negative sentiment on the part of consumers, it's usually been positive. There are about, I think, 8 other
The Tesla rebound.
similar spikes. 7 out of 8 times we were higher 6 months and a year later. So that kind of sentiment we've seen, such washed out sentiment, it tends to
Yeah,
be,
it kind of did a little bit.
things can stay volatile in the short run, but over the next like 6
We've got a flag.
6 months to a year, it's usually
We'll go to
a
1,
good
2,
sign.
3.
Yeah, it's interesting.
4.
And that could be a contrarian indicator, right? I mean, when you start to see more people getting negative. Just a quick thought. I only have seconds. I'd love just a quick response. Cash. Big mistake to sit in cash or put it to work on the pullbacks? What do you do with cash?
I think this is going to be a volatile couple of weeks. And so if you have a little bit of cash here on the big down days that we're likely to see, we're going to see big up days and down days. When you get a big down day, you can use some of that cash to add exposure. We're not like saying, dive headfirst into the pool, but, use those as opportunities.
All right. Paul Hickey, co-founder of Bespoke Investment Group. Thank you, Paul. Great to see you. Appreciate it. And stocks are lower today, up off the lows of the day, though. Charles Schwab's Jeffrey Kleintop is standing by. He'll take a look at the very latest that we've been seeing in international markets, which have outperformed the U.S. What drives that, and where are we headed next with that play? We'll be right back.
Here we go. So I'm gonna let's look at the bigger picture again. Here on the SPX. I should have jumped in it right there. It was at 510 just a second ago. Feeling kind of bullish. How not jump so much? Right now we're above the 200 SMA. We had a 1, 2, 3 counting the wicks. 1 bis, 2 bis, 3 B off the 63. Yeah, that'd have been a good little trade. In and out of that in a couple minutes or less. If we break, oh, it's a triple top. Take the body of that candle and run it to the body of that one. That would have been an exit idea. We're squeezing, we're above the 200 SMA. But I want to pull up the 20-day on this for a second. We've gained back a lot. Man, that was just a bad day for me yesterday. Still can't get over it. It's weird how things change overnight. We really don't have that big of a spread here, just $40. 50, maybe 60, 56, 70, yeah, $60. There she goes. She's gonna come on up to the head and shoulder line, I think. I missed that trade. That'd have been a couple hundred right there. 610 to 810. I'm getting tired.
2017, and that was all despite the uncertainty and tariff threats and focus on China. Global growth persevered. Global growth picked up, just as I talked about.
You go get an orange.
Forecast for this year.
I'll be right back.
Emerging market stocks, which are more economically sensitive, performed the best, led by China, which implemented a very big stimulus program back in 2017, just like the one amounting to 11% of GDP they just unveiled at the March 5th National People's Congress meeting. So, emerging market outperformance may have legs beyond Q1 despite those tariffs.
Well, what's interesting is that when you talk about tariffs, and we don't know exactly how it's going to go, but that there's already some animosity, evidently, right? Everybody knows this, but how, this goes, because you even mentioned boycotts. No one likes to hear about that, but I guess this is something that is a truth.
Yeah, we've all been focused on, the upcoming tariff announcements. Obviously, there have been some. There'll be a lot more on April 2nd. But consumers aren't waiting for this. Boycotts have already begun. So, the pulling of U.S. alcohol brands from store shelves in Ontario got some attention a month or so ago.
Who cares?
The majority of Canada's imports from the U.S. are not consumer goods like whiskey. They're machinery or other capital goods. So a consumer boycott of the U.S. that could be more impactful would be a boycott on U.S. tourism, which is ironically on the services side of the economy and not subject to tariffs. Canada is the top source of international visitors to the U.S., believe it or not. And the U.S.
It is not.
Talked about even a 10% reduction in Canadian travel could mean millions of fewer visits to the U.S. and billions in lost spending, probably some job losses as well. And it's already happening. Canadian residents took 13% fewer trips by air to the U.S. in February than they did a year ago, according to data from Statistics Canada, and land border crossings fell as well. In fact, they were down 23%. And I can tell you anecdotally, the lines at Space Mountain have gotten shorter here at Disney World, where I live, in the recent weeks.
You can see that from the top of your house. I mean, I don't know. I guess you ride Space Mountain a lot. But what's very interesting is that
it's weird how they come up with their stuff.
ETFs of emerging markets.
Wokeism, what hurt Disney.
Something like an ETF that follows the DAX. All of these ETFs that track Europe, etc., even Asia, those seem to be a better play than an ETF here at home.
Yeah, they've really, I continue to like this. So this is all part of our 2025 outlook that we published back late last year, talking about international outperformance this year, really a widening outperformance between Europe and the U.S., and we're definitely seeing that, and I think it's got legs. If you look within Europe's markets, where we're really seeing outperformance is those companies focused on European sales. So it's a big share of sales to Europe versus those in Europe that have a lot of U.S. sales. Luxury makers.
So it's kind of retested now.
Sales, and they've really felt the pain. Automakers in Europe are trading just like automakers in the U.S., down quite a bit this quarter. But if you take a look at more European concentrated sales, so like banks and energy companies and materials companies that are benefiting from the increased stimulus in Europe, we're really seeing very strong outperformance there and continued gains, steady gains here recently. So I think all of that plays into a continuation here in the second quarter with all the uncertainty over tariffs and the pace of U.S. economic growth, focusing on improving growth in Europe and improving domestic stimulus in Europe continues to be a positive trade for investors.
Yeah, and we talk about the MAX 7 at home. A lot of folks are looking at the European Defense MAX 7 of their own. I mean, that would include, BAE Systems and others as the preparation
See when I said getting ready to retest?
European defense sort of heats up as they've been a little less friendly with Trump, right?
Yeah, that's right. So clearly it looks like Europe's going to be left to their own on defense spending.
If you're new to trading, anytime you break a resistance like a triple top, 1, 2 bits, and freebie, they like to come back and retest that old resistance. So that from there to there, about $6.10 to $8, $6.20 to $8. Always retest. So don't ever chase. You never have to chase anything. Let it retest that old resistance. And then jump in it. Oh, good.
I'm not sure I'm quite over the first round. Thank you so much, Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Thank you. Still ahead, we're going to look at the EV sector, electric vehicles. Do you love yours? Did you buy one? Chinese EVs have done so well also. So let's talk about this group, the winners, the losers, the possibilities. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention
We're having experiencing technical difficulties.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches.
Dad.
He really started with nothing. He worked hard, and after he...
Okay. Like I said, I don't like the dad commercials. Tesla's about to hit the 200 now for some resistance.
Reports. Thank you both for being with us. So Lauren, I'll start with you as you take a look here. I mean, obviously there's a lot of talk about tariffs, but is the EV space, was it in a good space before all the tariffs came on?
No, it was in a terrible place. There's tons of inventory sitting at dealer lots. Car sales are off. We're far back from the 17 million annual sales here in the U.S. We get a lot of product coming in, and prices on average are substantially higher.
Yes, they are.
Manufacturers are really in a tough place overall, and of course, pushing that EV mandate, which is now going to be gone under Lee Zeldin and President Trump. That's going to make a big difference also, because they were taking a loss on every single vehicle, and you were seeing lots of cutbacks. You were seeing them cutting back to 2 shifts a day. It was not good.
We're at 860, 880. You know, EV cars are for the elitist, people that have money to blow.
That being said here, Ben, you know, the one bright spot, BYD did talk about a 5-minute charger. That changes the game and the landscape, doesn't it?
Yes.
Yeah, well, you know, I have a more optimistic view of
Man, these calls are moving
the
up.
industry overall. Just sort of stepping back, you have to keep in mind that the EV is a major technological step forward. It's replacing the internal combustion engine, which is, you know, technology that's 120 years old. So slowly but surely, you know, we are seeing EVs emerge. Even in the U.S., I will note that the U.S. is considerably behind both China and Europe in terms of EV adoption. And to your point about charging, I think there was an article recently that suggested that the number of charging nodes, EV charging nodes in California is actually greater than the number of gas nozzles. So California sets the pace for a lot of technology adoption in the U.S., and I think that we are going to see more EV adoption over the coming years.
Yeah, understood. Is Tesla in a different ballgame, maybe because it's a status symbol, because it may not face the same tariffs here? Lauren, you know, there's a lot of talk about how Tesla may be able to hold its own because it does a lot of manufacturing here. Because the idea here is that cars will go up in price, EV cars, combustible cars, with the tariffs.
Right, we're talking about $3,000 to $6,000 on average for an increase of prices. Some manufacturers won't increase the prices and they'll absorb it. But
They should. I mean, they're
Tesla
expensive
itself,
already.
They produce cars in Texas as well.
Okay, get ready, folks.
But they're not getting away scot-free. They still have components coming from Canada and Mexico as well as China. And they do produce for other parts of the country,
Randy?
Other parts of the world, in Germany as well as in China. So from that standpoint, they won't be.
Who is this chick? She's a tough one.
Still be hurt badly here in the U.S. But remember, who owns the bulk of the EV market? It's Tesla. Second place would be Hyundai with their Ioniq line.
And Ben, as you take a look at the competitive landscape, which one names do you think are the leaders? And you can add in those Chinese names, and can they really emerge as the real winners, whether it's in China or even in the U.S.?
Well, when we think about the U.S., as your other guest just mentioned, Tesla is by far and away the dominant player. They have close to a 50% market share. The next closest competitor is way behind.
What does that
in terms
sound?
of maybe 8 or 9%. I think Hyundai was.
It's good.
In terms of the
coming from
technology
them.
that Tesla brings to bear, keep in mind that the Tesla Model Y was the best-selling car throughout the entire world last year. That's not the best-selling EV. That's the best-selling, automobile on the face of the planet. So,
yes,
Tesla was pretty smart early on, building a factory in China, also a factory in Germany, and its forthcoming Model 2, which I think will be a real game changer in terms of price performance for EVs. Tesla a couple of years back was toying with the idea of opening.
Okay, the
a factory in Mexico.
5715s. I'm watching real close here.
Given the current tariff landscape and the trend.
We're now at
towards
350.
American manufacturing. So I think Tesla is just way ahead.
Right about in here.
Yeah, and just quickly, Lauren.
Off the
X-Men,
21.
Neo, Rivian, Lucid, Tesla. I mean, are all of these players going to be around? Just quickly.
Not all of them. BYD is the biggest by far. and they will most likely be the strongest as well. But some of the
Well,
other
you
ones
think
I've
so?
heard about,
No,
one of
they
the things
won't.
Your other guest didn't mention
Tough
was that
chick.
all the Chinese brands are supplemented by the Chinese government.
It's a
So
little
that's why
risky.
they're taking over a big chunk of the European market. When you can sell the vehicle that's equivalent to another German brand at a fraction of the price, it's because they're getting supplemented from the Chinese government. And that's a problem. And that's why you're not seeing them being sold here, because they would have to be built here, which would increase their costs. But remember, the real reason President Trump's doing this is he wants USMCA brought back to the table earlier than July of 2026. And this may be the linchpin that brings Mexico and Canada together.
Okay, good to see you both. Lauren Fix, Ben Rose, thank you very much. I'm Nicole Penelides. Thanks for being with me. Keep it right here. Market on Close with Oliver Rennick next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors.
Who does she think she is?
With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage
What am I
account is
doing?
available in seconds.
What an
That means
idiot.
You can stop waiting and start investing in stocks, bonds, money,
Oh,
funds,
God.
and more. Get more with Schwab Bank Investor Checking. The checking
I thought I was looking. Oh, man. This ain't smart. Remember when I used to.
It's time to look
Oh,
forward.
God. That's time for me to quit. I thought I was looking at. I didn't even looking at the price. I'm just looking at the chart thinking I'm trading off of the SPX, and this is Tesla. Remember when I used to do that, Randy? It's been a while. Shit. Now what have I done? Oh boy. What to do? Well, we're bearish now. We're under the 200. I can't believe I did this. Yeah, that was a bad move. Bad move by my bleh. Okay, I got to think of what I got to do here. I think I'm just going to add a bunch of calls. Yeah, this was stupid. I'm going to add here. If I get 145, I'm going to try to add here. There's 155. This could be a bad, there it is, 145. Come on, give it to me. I think I need to go ahead and jump in this trade before it's too late. La la la, you dumbass. Well, well, well. Should have added there at 160. I used to do that a lot when I was stoned, but I have no excuse right now. I could get out right here and just take a $40 loss, 30. Shooting there's 3. I'm back to even. Yeah, that's dumb. Dumb. So I'm going to get out of this trade. $3. Out even. I can't believe I did that. God. Well, what I did here, I should have bought the dip. I mean, I had a good chance to really make good money on this trade right here, $1.50. But I was looking at the wrong chart. I wasn't even paying attention to the name or the price or anything. I was just looking at the candles. And I thought I saw a good spot. I was looking at Tesla. And it dipped down anyway, but I got in the SPX. And it dipped down to 145, 140. I made a trader's mistake. I got out even. Once it popped back up there to even price, it was a bad trade, so I don't want to continue in a bad trade. I mean, sometimes I get lucky when I use something stupid like that. But yeah, I'm getting tired and wore out and virused up. Oh, it's now power hour. Post power hour by 4 minutes. Stupid me. Maybe I'll go have some fish when I get done here. I was going to have some Mexican food, but there's $2. I could regroup and take a trade here. The 1, 2, 3 set up. So 2 bits and a freebie. That was very unprofessional. There's no one quite as entertaining as I. So he's looking at the same calls. He's going to go for revenge. 170 to 260 right there. Ginny.
Some kind of like dollar
And
store
Oliver.
style joke or something is, that company was sold for $1 billion basically exactly.
Yeah.
Yesterday, and at one point that was like a 9 or $10 billion stock. So
Yeah.
it was a heavily discounted deal for a discounter.
You're right. It was almost like the dollar store version of it's more for itself.
Yeah, exactly.
You see what she was wearing right
I
there?
did speak with somebody last night who works for the company that bought out the business. So it seems like Family Dollar.
To get her back on here, I want you to see something.
Giving us something of like
Reminded me of a
we need to
flashback.
hide out and cheap stuff right now.
That right there?
It's about the economy.
Well, especially when you consider like the way in which we like read the economy so often through the scope of.
Back in the 70s, when I got my driver's license, I was 16. And they had that same kind of cloth, but it was called a tube top, where you just had like a little round thing going around your breast and around your back, and everything else was exposed from the belly to the shoulders and neckline and all that. They were called tube tops. And I'm going down the street, and I see these two girls wearing tube tops walking down the street, so I pull over to the side of the road, and I got to screaming at them and yelling at them, saying, "Come over here, let's get together and talk." And as I was doing that, I was on the side of the road, and I guess I let my foot off the brake, and the car started easing into the road, and I got hit with a 2-ton truck. And I dropped my mom off at Walmart, and these two girls just sitting there laughing and pointing at me. But they were tube tops. They just went from right in there, and it just wrapped around her thing. Man, they were beautiful too. I mean, Mom, I got in a wreck. What happened, son? Well, it's a long story.
Last week too, anything there that just shows people are not, dumping everything hand over fist, and they're not. We're close to even on the day. Even Tesla, I mean, quite a wild round trip today, but still up, and I think also kind of somewhat auto tariff related.
I do too, but it's confusing to me. You have Musk coming out on X saying, hey, we're not insulated from this. We're going to see probably some impact. And then you have Ford, which is the next name. I guess maybe Rivian would be more comparable to Tesla because it doesn't have any of really like
so nascent, so new.
It is, and also it doesn't nearly. You can't even compare them because its scale and in terms of like the market is so insignificant compared to like Tesla that I compare it to Ford. 80% of Ford cars are made in the country. Ford's down on the day. Why is Tesla rallying? I don't understand it.
I think anything. Here's how I think I could logic my way through that one though fairly easily. Tesla's up. One, because it's Tesla and the market's got, some reticent bid here. That's just been going on for like a week, right? But to your point about the autos, Ford, anything that's marginally positive for Tesla relative to its peers is also by transition marginally negative for Ford because Tesla's been just crushing them on the EV front for years. So if we're not going to import EVs, and that's not going to be an option for me because the tariffs are too high and I don't want to buy that as a consumer, then I go Tesla, that's even more reason for me to not go Ford. I mean, and I think Rivian up is kind of part of that same idea.
Right.
People would rather buy Rivian than a Ford. I think they just don't want to buy a Ford.
Whoa. The F-150, I think, is still like the best-selling car in the United States.
True. I'm looking at the chart. It's been losing market
It's not a car, it's a truck.
Even GM was really good throughout the second half of last year.
Yeah, you're right.
But Ford has just been...
Well, because at least for GM, they've been like offloading crews. They've been actually trying to ditch that segment of their business. So I think that is also new. And GM trying to right now cozy up with like NVIDIA, which is actually an interesting story of its own right. But
Yeah, Tesla higher today.
57.15s are getting ready to break the Head and Shoulders.
Recently, Netflix has become more interesting to me because it's up today pretty significantly, and it's also been one that, I mean, if you believe in the consumer and the subscriber, it dominates streaming right now.
Great chart, great point on that. Super underappreciated. If we flash that Netflix chart, last one here, because it never broke, even in a sell-off. It bounced right where you can draw a line going up and to the right.
It's a thing of beauty. I've had to stop looking at NVIDIA, which is like my go-to of the end stocks that I need to look at it at Netflix now, apparently.
Yeah, that's another example of one of those that has a secular, stock-specific story behind it. So those type of things are keeping us close to balance on the session. Appreciate it, Jenny. Thanks. Good eyes on the market. Let's talk some bonds before we get back into stocks and options. We've got a bunch of great guests joining us this afternoon. Keith Buchanan joins us from Global Investments to kick things off. He's a portfolio manager with a mind for fixed income and macro. Good to see you again, Keith.
Good to see you.
So right now, stocks have been kind of in this balance. Some pretty whippy moves this week to nowhere, but it does seem like bonds are starting to find a little path forward for yields higher. What do you make of that?
Sure, and thanks again for having me. We've been looking at fixed income specifically from a treasury standpoint and understanding what this environment really means for the yield curve. And the understanding we have now and kind of how we've been coming to our our consensus of how we view the marketplace is just understanding the front end that has a lot more pressure on it now because of the very active debate, as we saw last week and, of course, over the past several months, of what the Fed's next moves are, considering how drastically, at least the rhetoric around the environment has changed. And also the softness that we've seen among the consumer space, and if that doesn't really trickle into the employment market, we saw claims this morning that weren't necessarily draconian. And so if the employment picture stays together, the consumer becomes softer, and inflation is pressured higher, perhaps, and again, that's debatable, with the tariffs that are being implemented now and, of course, another layer next week. It's still yet to be determined, and that front end floating higher and the back end moving a tad lower is indicative of just a lot more uncertainty around the marketplace. We talked before the last cycle about how important it is for a inverting yield curve to kind of send a signal for the marketplace.
This room's really become the masters of the power hour. I don't know if I want to be trading anymore, but I wish I'd have jumped in this thing here. There'd been $100 right there. From there to, well, I don't know where it was, 285 to 420, 430 to 57.15s. Now we're about to top out. I'd be out of this trade right now. 460, 480. Double topping. 530. Dadgum you. Anybody get it? You didn't? Well, there it is. They've been a nice little trade.
Expectations, we've started surprising a little bit more positively, or at least not as negatively. Our jobless claims today are like they haven't even updated it. The thing is just this monotone heartbeat. And GDP, decent. So should this give us some runway before people sell stocks because of growth concerns?
It should, but one thing that's really interesting about the data you pointed out, which is all hard data based on incoming activity we can monitor. and the soft data, which is the sentiment numbers that we've seen just really move south in a very dramatic way. We spent the last part of the cycle with very resilient hard data and soft data that indicated that the consumer space had been anticipating weakness, the past couple of years, and that divergence was fascinating, kind of threw a lot of people for a loop. We saw that close after the election has actually widened back out over the last couple of weeks. So understanding, the hard data is still, as you mentioned, resilient and showing some promise and not really matching up with soft data, but understanding also why is the consumer feeling the way they're feeling about inflation expectations, broader economic optimism that seems to be lacking right now. Does that
She goes.
Last point, if the number comes in light for PCE, do you think that could make yields go up because it gives us relief about the economy, no stagflation?
Sure, it could. Will it go up, or will it, if it's too light, then yields on the longer end could actually go down, as they anticipate the Fed would be more reticent to having a kind of wait and see approach. They get more aggressive later in the year. So if it's lower by a significant measure, that would be a little more concerning. So it's grays and it's shades of gray when it comes to the number that we expect next week, tomorrow, and then also coming forward next week. So we're taking them as they come.
All right, great stuff. Very good thoughts. Thanks a lot, Keith. Good conversation, good yield curve knowledge, good setup for tomorrow too. With all the talk about Tesla and all the stock stuff we've been discussing. Love that conversation. Get us ready for PCE tomorrow. Danny Kershaw coming up next. That's Keith Buchanan at Global Investments. Danny Kirsch is coming up next. S&Ps are green.
Nice close.
Equity world we go.
321. We'll be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any
God
device,
darn,
free.
720.
Schwab Network.
860. I'm really
Trading with
pissed.
Schwab is now powered by Ameritrade.
910.
Unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Wow. $10.
Whether you're an experienced investor or just getting started, Charles Schwab offers.
Well, there it goes. Right up to the right shoulder of that Head and Shoulders, right where I called it. I've talked about the inverse and the inverted. I mean the Head and Shoulders and the inverse Head and Shoulders. There you go. That's called a megaphone pattern. That'd have been a nice trade right there. Right around 360 all the way up to $10, 1030, $700. I think it even got lower than that.
Shorts. Yesterday, a weird day where all the AI names got smoked, and you had actually more than half the S&P up, and it was very defensively led. If anything, you might get some like month-end flows, some rebalance into equities. I think that's what's being very supportive of the market, and that's why the market is hanging in as far as like the end of March into quarter end into the next week, which is Monday's quarter end. So I think those flows are helping things keep everything together. But for my seat, that is like an absolute obvious opportunity to add a little bit of protection for April 2nd. And what we're seeing there is like nothing's really priced. We know that's Liberation Day, and you saw
Liberation
I thought that was
Day.
a joke, by the way, when my guy KG brought that up the other day. I thought it, yeah, I didn't realize that's what people will call it.
Yeah, no, we're gonna get liberated. So that'll be the Liberation Day. We saw it today. We got a taste of it. Ford and GM are feeling liberated as the stocks are down, I think 5 and 10% plus each on the auto tariffs. And you were talking about Tesla earlier. I think part of the reason Tesla's sort of a winner is I think a lot of their parts come from the U.S., so they'll be less impaired. But also, yeah, it's in one of these short baskets too, so that could be why it's sort of working today. But regardless, we think April 2nd is just like this weird event that is massively underpriced, and I think part of the reason why it's underpriced, you've had a bad month, you have money flowing back into equities because of these pension rebalances to end the month, which are very supportive, and that's keeping things, I think, together, even though you had obviously some negative news flow yesterday.
Exactly.
Tech is sort of hanging in. You saw the CoreWeave IPO that's tomorrow. It's already been cut, I think, in half as far as the size they're trying to run with, and the valuation keeps coming down, and I think that's sort of perhaps a little bit of a canary in the coal mine, and the fact that it keeps getting cut, and maybe they put some pressure on the AA trade, but more importantly, the tariffs are getting worse. April 2nd isn't the end, but it will be a continuation of what we've seen. And I typically, when we go into these events, like these well-telegraphed macro events, you have some sort of volatility bump. So
Right now, that's 1%, one-day implied moves. You sent me a table. I just want to get the data out there so people can follow along. You sent a table over. I'm going to read the numbers. On tariff day, so-called Liberation Day, April 2nd, one-day implied move, 89 basis points for the S&P 500, and then it's actually higher for the NFP print that comes after on the 4th at 1%.
Yeah.
You're saying that's too low?
Absolutely, there's nothing priced for it. It's priced like a Tuesday. Or a Wednesday, rather. April 2nd, it's priced like a regular Wednesday.
Okay, that's
April, March. Yeah,
seems like all we talk about, though. So maybe it is
very
priced
weird,
in.
right? So like this is what I would say. Like if there was a huge implied move priced in, I'd say it's probably just the fact that it happens to be bullish.
Okay.
This reminds me. Do you remember Brexit? We had the VIX was massively bid for Brexit, and then it happens. The bad outcome, the market rallied because you had this huge volatility decline, and that helps the market sort of find its footing, and people who are low in puts are selling their puts, or the delta shrinks on the puts that some dealers are short, so they're covering. That all helps. You don't have that this time. You have no bid to volatility going into this event. So from our seat, it's like there's no reason not to have some sort of hedge on, because I think that everyone's like optimistic that they'll be pared back, it won't be so bad, and the market's sort of already planning for it. I think that's like totally off, and it could be worse. It might not be that bad, but even if it's not that bad, nothing's priced for it anyway. And then you also, if you wanted to buy a put, even for April 4th, you payrolls as well. So it's like you're getting in a couple events. This is not pricing in anything, and from our purposes, I don't think you get that vol deflator sort of situation where vol comes in a lot, volatility comes in a lot, market rallies. That's just not going to happen this time because there's no volatility been in the first place.
Okay, love the Brexit comparison, by the way. I'm just kind of surprised I haven't heard that at this point. That's really
because Brexit was an event. This is nothing.
Right, but it does in terms of like what it represents. It's very similar. So I do like that analog.
Yeah, absolutely.
But priced totally different, the opposite. But in terms of like conceptually, I agree with that. Yeah. So the implied vol, the whole term structure coming down generally.
Yeah, so volatility has been coming down the last week and a half. I think since this rally started, this is just the S&P term structure. We're just looking at the next few days. Again, you can see April 2nd is below April 4th, and these are just daily implied moves. One of the nice things about these 0 DTE options, you can back out daily implied moves. So for us, like the next really big events are this weekend. For some reason, there's a little bump, so maybe something's expected, and then payrolls, but nothing really in between. So that's why we think this April 2nd date specifically is like massively underpriced. We've been suggesting to clients maybe look at S&P hedges, but the other area I think is really interesting is Europe. So
okay, hey Dave, hold on one sec, because I want to ask about your international trade. But just to be clear there on that, it sounds like you would just be then okay owning volatility irrespective of direction, or do you think you want to be hedged specifically to the downside for stocks, upside for vol?
I'd rather own puts than calls.
Okay.
I'm not sure the situation where this is super bullish. Maybe, but straddles are inexpensive as well. I think straddles are totally fine.
Okay.
But I'd be a lot more bullish if volatility were higher going into it.
Got it. Okay, but straddles, I guess, a middle ground then. Okay. Tell me about the foreign trade. I heard you talking Europe, but I know you've got an EM trade. We got about 90 seconds.
Yeah. So a couple of things. So EFA, EM, FXI, they've all outperformed the U.S. So EFA is the developed markets ex-US ETF. It's up around 9% year to date. This is just the implied volatility of EM relative to S&P over the next month. We think EM options are low. That chart going down means EM options are relatively cheap to S&P. The lower, the cheaper EM options are. For whatever reason, there's not a lot priced into EM markets, not a lot priced into Europe. So what we think the potential opportunity could be just buying puts on like an EM or an EFA, which we would expect to underperform, especially as tariffs are enacted. Like these are the potential losers. There could be a tariff war starting where U.S. says we're going to do 20% tariffs on XYZ country unless you put tariffs on China. EM is roughly 20% China. So there could be a pretty negative impact on EM markets for the next few weeks, and the fact that again, I think S&P options are cheap and EM options are even cheaper. So it's
that's what
yeah.
Danny, can you put them together, or do you see them as two different things? Because this year they haven't been. They've been kind of opposed, flows to the rest of the world versus flows here.
Yeah, I mean, one thing you could do if you think there's not a lot of upside in the S&P, perhaps you could, sell maybe an S&P on the money call or call spread to fund an EM put or put spread or something like that to play that underperformers, that catch-up trade where it's very unusual for any of these markets to outperform U.S. and it tends not to last. I get the fiscal push in Europe is people are very excited about that, and we'll see if it continues. But for the time being, developed markets ex-U.S. have outperformed the S&P by around 15% year to date. Massive tariffs are coming to these countries. This is what I'm just repeating what the president's been saying, and there's nothing priced. I think EM options are cheap, EFA options are cheap, S&P options are cheap. You do a pairs trade. You could sell if you think EM is maybe the bigger underperform, which it certainly could be. You could sell some sort of U.S. option to fund.
That was the exit idea. That shoulder.
EM as well. It's like it's very weird when there's an event that everyone knows about, where it just seems like it's massively underhedged.
Yeah, really interesting. Fascinating also that the international market, I mean, I guess it makes sense because it's been outperforming generally, that vol might even be lower there, but it creates some interesting opportunities where you can kind of bet on volatility without, even if you want to be more to the bearish side of your point, go for it, but it sounds like there's plenty of ways to do it, just betting on vol in general. Great stuff, Danny. Thanks as always for giving us a bunch of different options.
Thanks.
Really good analysis. Thank you, sir. Danny Kirsch, head of options at Piper Sandler. By the way, we're just kind of getting going with options. We've got KG joining us on deck. Kevin Davitt's here from the NASDAQ as well. So hope you're ready to trade. We're busy here over the next half hour.
Yep, I'm about done trading. That should have missed a good one right there. Hope we learned something today. Man, I learned a lot.
Believe me, when it comes to investing, you'll love Carl's
I don't
Way.
think my computer's messed up at all.
But there's Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Market on Close. Let's continue looking at the charts and technicals. There's some options flow. Mr. Kevin Green with the S&P 500 just right, basically even right now, KG. I wonder if we can get one of those nice closes.
I think it's going to be a little bit difficult for a nice close, but anything.
We had a nice close.
Obviously, we just hit that 57.20 level. It has been an area of resistance. In fact, that was kind of a little bit of a level that we saw on yesterday as well that we wanted to be mindful of. But I'm seeing a lot more flows kind of going to the 5,700 points, and I would say that we probably have some pen risk sitting at 5,700. Now I have dealer gamma pressure right now sitting at 56.90 because you are seeing some flows there as well. But you might also have a situation where somebody's trading 5,700 puts selling the 5690s. So I would say we had a nice little bounce. We're kind of at a little bit of a neckline here, if you will. We get above
I called it.
5730 is going to be your next area where we do see some pressure. And if we have some form of
Shoulder line, not a neckline.
50 is also something that could be on the radar. That was actually a part of the calls that were actually being sold overnight earlier this morning as well. But we definitely need to get some buying activity in order to try to move us higher. If you kind of notice, the selling pressure has been very aggressive when we have
The 5715s are now at 350.
Kind of incremental when you're looking at the volume. So I would still say sell side probably has a little bit more strength to it in selling these rips rather than maybe new buyers really trying to step in and try to push us higher.
I'm kind of starting to feel a little bit like that too, unless we finish strong here today, because it looked like there was a real strong push earlier. The data have gone the way we wanted to see them. My kind of framework was that as long as the data don't disappoint this week, we should be able to keep up the strength. The data haven't disappointed and we haven't kept up the strength. I'm also finding it harder to track the way stocks are responding to bonds in the dollar, which usually is my place in which I build all my analysis. And so if that starts to tremble at all, I start to get a little bit less confident. And the fact that we had the dollar up yesterday, but stocks weren't up with it this time, and then today the dollar really crashed hard again. So, that too is just right now sending mixed messages.
Yeah, and Oliver, let's just be frank here. You're not the only one. Everybody's trying to figure out what the heck is going on with the dollar, as well as yields and how that
even
plays
bonds
into
too.
Yeah, everything right now is a little bit disjointed when you're looking at the traditional correlations, whether it's early cycle behavior in the markets or even late cycle behavior. We're kind of broken right now on all of those fronts, and I would agree with you. In fact, the biggest thing that I kind of worry about is obviously technology, communication services. We bring it up pretty much every single day. Two of the bigger weighted sectors within the S&P 500, and they can actually push price. Now we've seen a lot of activity in the staple space, but if we bring up the XLK, and the reason why I want to bring this one up, we will be probably seeing, most likely tomorrow, a death cross on the XLK, technology sector ETF, the select sector ETF here. Now this death cross is something that you do not want to see as a technician, and if you go back and you look at when we actually do have these crosses, they usually do occur at the start of cycles. We had one time where it was actually at the end of a cycle, but at the end of the cycle, we were already pulling back 15, 18%. Something to keep your eye out on. Doesn't mean that we're going to immediately see a sell-off and just this aggressive move to the downside of 8%, 10% by tomorrow or anything of that nature. But that cross is something that you don't want to see. NVIDIA also has that cross. You're starting to see a lot more technologies that have that, technology companies that have that cross there. MACD is actually still trying to stay in its bullish formation, but it's below that zero line. But stochastics, which is a very volatile indicator, but it's a good one for very short-term pops as well as sell-offs. And tomorrow, most likely, unless we get a very violent candle to the upside, we probably will see a little bit of a bearish cross on stochastics. Doesn't give you a time frame as to when that's going to happen as far as the sell-off or the aggressiveness of the sell-off, but it does appear that we are setting up, just based on those two indicators out of the three, that a pullback could be on the horizon here unless we really try to change our direction over the next 2 to 3
Can we come back down here to the 200?
Really like the XLK and the Staples.
230, 339 right now.
Yesterday and today, and bringing up that again just because that dynamic was really present again today. So that too is arguing a little bit more on the bearish side, but at least in the camp of bearish, if you will, arguments, buying equities of any form is still one of the lesser bearish versions, right? Because that's still, there is some stuff happening. Like, look at the stocks we talked about. Look at Netflix. I mean, that stock is looking really good. You've got some stuff that still looks pretty firm. And even though, Dollar Tree's not some great hero, the fact that we are actually buying some stuff, even if it's in the defensive category, it's helping keep us together a bit.
Yeah, so if you're looking at the XLP or if you're looking at consumer staples on the weekly chart, it actually does appear that it wants to try to make a break to the upside. And if you do start to see a little bit more of a value trade, especially some of those stocks like a Dollar Tree, we talked about it the other day. I mean, a 3-year weekly chart on Dollar Tree, you can make a case that there's a triple bottom that is taking place here. So there's obviously we're seeing some buyers kind of stepping in. Dollar General is looking the same, and then Walmart is darn near pretty much at the 200-day moving average, another key buy zone here. But even if you kind of look at a Netflix really decent buying if you kind of look at the chart, but it's testing close to an area of resistance. That $1,000 level on Netflix is going to be a very hard one to break. So it is kind of in a triangle formation that it needs to resolve to the upside. I mean, Google is trying to find a bottom, but that looks a little bit weak. So there's a lot of mega cap tech names that still in the longer term time frame have a lot more work to do. I'm not saying that I'm bearish because of it, but it does appear that you need to find other sectors in order to try to get a little bit more confidence in the fact that we just have these intraday pops and we have these grinds to the upside, and then we just sell off 10, 15 points in a matter of 5 minutes. We're doing it right now, Alibaba, by the way, if we want to bring up that intraday chart one more time, is also a little bit concerning that, one, we have a lack of maybe liquidity in the market, and then two, those that are long are selling into strength, short sellers are selling into strength. Any pop that we get is really not conducive for a very good structure when it comes to the prices, and we're still testing that gap. Now, we have an indecision today on the S&P 500, but this bull flag that we're testing out right now is going to be, we got to have it resolved here. And I hope that we resolve it fairly quickly. And I would actually like to see us actually close the gap to the downside, find some buyers, and then be done with it and move higher rather than let it linger here.
5750 kind of pinning us here for a good bit of the trading session last 24 hours. Like to look at the big tech trades versus the other stuff. Another one that still looks good on the air, the banks too. So we'll see, but we need a firm finish here to get us out of some of this muck that we've been in. Thanks, KG. Bears proving very resilient and adversaries that are quite capable for bulls right now. Kevin Davitt's joining from the NASDAQ. We'll take a look at the tech side of the volatility spectrum next.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Stocks in the middle of a battle here with a little over 15 minutes left. Kevin Davitt's joining us from the NASDAQ. He's head of index options content. Right now we've got 5 of the 7 big tech trying to lift us into the close here. Kevin, we've been talking a lot of volatility. I know you heard some of our conversations. What stands out from your side of the world? What's unique about what's going on with NASDAQ Vol?
So I thought that earlier conversation was interesting for a handful of reasons.
Danny?
Danny's conversation, correct. My perspective would be that from a broader volatility standpoint, things never really got sloppy this year. And that was kind of a subtext of what I heard in that previous conversation, and that perhaps more concern should be priced in. Now, I'm not making that argument. I'm saying thus far this year, things never really unwound in an unwieldy way. And that's typically something you would associate with capitulation. Again, not saying that needs to happen to find a bottom, but more recently, like ahead of yesterday, from a technical standpoint, seeing the NASDAQ 100 move right back up to its 200-day average and fail pretty significantly, I thought was interesting. Big picture volatility, on a realized basis, I looked back at the past 10 years before I got here today, and both the S&Ps and the NASDAQ 100 are running right in line with what you've seen over longer time frames, slightly higher than last year, lower than 2022, but nothing really notable today.
I love your perspective that kind of echoes that point from Danny's about it kind of looking like a regular Tuesday or Wednesday or whatever next week, but also your point that it never got slappy. In fact, what was almost unique was in the volatility path was the way it stair-stepped higher. Instead of taking the usual kind of shock, surprise, vol shoots up, comes back in as we realize things are okay. It was like this steady preparation for a cliff that never came.
Correct. And we've seen that unwind post-standard expiration, like earlier this week. Now, one of the things, and again, I say this often, but I try to take a broader view, and one of the paths that I think there's a potential corollary is late 2017 through 2018.
Okay.
That, from my perspective, would be like the semi-positive or glass half full scenario for this year. And then the alternative, I think, would be a 2022 setup. And
I've seen that chart where the 2017 to 2018 would kind of look a little similar in the path. Is there something structurally then, like Trump 1.0?
Well, so that was one of the comparisons, right? And you had a lot of trade war rhetoric banging around in 2018. You see that again, but it seems like a much more
serious,
articulated plan this year than a handful of years ago.
Yep,
now,
agreed.
The sort of other comparison is moving into the end of both those corollary years. You had kind of low vol melt-ups into the end of the year, followed by kind of episodic vol. Early 2018, half of the trading days in the first quarter, the NASDAQ 100 realized moves of plus 1.1% on average. So you saw that in 2018, and then following Volmageddon and another sell-off, markets stabilized. Now the
Volmageddon, a pretty key component to that, but to your point, more episodic vol in a traditional sense.
That is sort of my point, that it was concentrated, and then the market moved on. As opposed
cleaned out a bad product.
Right, as opposed to 2022, where you did kind of stair-step lower. You never really saw implied volatility go wild in 2022, but you did see it remain elevated across most of the year.
And it was like a slow-moving train of inflation, right? You could kind of see it coming.
Yeah, and parts of this year, I believe, are reminiscent of that. You're seeing concentrated emphasis on some of the mega cap names, consumer discretionary. The wind have been taken out of their sales to a certain extent, but whether we're beyond that and it was episodic to February-March period remains to be seen.
A great assessment, like those comparisons too. I think we are, as KG is pointing out, as everybody's pointing out, we're in this kind of weird spot right now, and so searching through history for examples is very helpful. So that comparison, and also we heard from Danny about it kind of being like a Brexit type thing. You've got something interesting which looks at specifically semiconductors skewing here as we kind of think about tradable opportunities. Walk me through this. We got the chart here that shows it's pretty elevated.
Sure. So what you're looking at in that visual, and that comes from friends of ours at Susquehanna, is the 3-month 25 delta skew.
Okay.
And specifically because a fairly sizable risk reversal traded yesterday, where a market participant bought call, sold put. And the skew, as indicated here, looks very different than it has for the better part of the past 2 years. Meaning, on an implied volatility basis, the calls look cheap and the puts relatively rich when compared to history. Now, chances are this is delta hedged, and I think more of an implied volatility play. But from my, again, broader perspective, I think an expression like that in the semiconductors is sort of like a distilled play on the broader NASDAQ 100. And we'll see, because we have seen skew move considerably higher over the past couple of weeks. Come off slightly this week at the index level, whether similar dynamics play out over the next handful of weeks.
The median is the orange line there, so you can see we're quite elevated. Then I guess the trade for the group, just kind of flip that on its head, basically, bet that it normalizes to some extent, or is there a way you can use the vol skew that's not picking a direction for the SMH?
I mean, my assumption would be that when something like that is done inside, if in size, where you're long call, short put, you're long delta there, and you're probably managing that directional exposure, and at that point it does become an expression of vol and an expression of skew. And I believe there are a handful of areas where you could do that, could be expressed at the index level. In this particular situation, they did it right on the semis, which have kind of been
targeted
the nuclear core.
Yeah, no, for sure. I've called it something like that before, the nucleus of tech. Thanks a lot, Kevin.
Thanks for having me.
Always a good perspective. Nice addition to our conversation with a bunch of all experts here this afternoon. Let's go to the equity expertise of Kevin Gordon coming up next. Thanks, Kevin Gavitt of the NASDAQ. We got less than 10 minutes left.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Uh-oh. How much time we got? No, dadgummit.
Opportunities don't stop when the market day
I'd buy it right here.
So neither do you.
I ain't gonna mess with it.
Round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide.
This is a good spot right here. If it was like any other time of the day, we could pull back and hit that line, but this is the 1, 2, 3 setup. Yeah, see, there we go. But later in the day, it's probably just everybody getting out of their trade and don't want to get stuck. You know, we still got to expect a little bit of volatility. But man, that's a good spot. Ah, these things are 5 cents. The 5700s at 110. I ain't gonna trade it. But I mean, it looks good. $120, $175. There you go. Out of the trade. $120 to $235. Dadgummit. That'd have been a good one. You could probably have plenty of time to get in and out of it too. Boom! Shit. Right to the 200. Out. 370. 120 to 370. Paper trade. That was a good spot. That really was. Funny. Oh well. It's $4. Rob, did you get it? Oh, they're buying the 57 puts. Did you get the calls? beautiful trade right there. You haven't been posted. Okay, well, reminds me of something that Punk just said that I used to tell everybody when I first was learning how to trade. Is you see a chart with a bunch of noise in it, like too many indicators, and I've been around people that just, have too much. And I always used to say, keep it simple and keep it fresh. Keep it as simple as you can. So I just use moving averages, the RSI, and that's it. I don't use the Kettner channels or the Bollinger Bands or the Ikamucho Cloud or just go, you can just go down the road. So I always try to make it as simple as you can. And Punk had, he's right. That dude's right that he listened to last night. So I'm going to get out of here. I had a really weird day today, same as yesterday. I come out real green today. I made back most of my loss yesterday, all but about $500. I had a good morning, and then I got stuck in that trade, and it just kind of killed my... sometimes I get a little insecure when I have a real bad day, but I had to kind of just blow it off, and come in the morning and start fresh and revitalize, and got that first trade out of the way, and it made the rest of the day go by real easy. And I took my time again, I went up and made some chocolate and made dinner and come back and take a little break and then just wait for the right times that match your strategy and not try to rush yourself, not try to beat yourself up like I did yesterday. Because everybody's going to have a bad day. And I don't have too many of them, but I had a bad day. And it really about tore me apart. And then I come in here today and I get that virus and I'm going, oh man, my whole, everything, you know. And I don't know if, I still have a little bit of distrust that guy that I called. Could have been a virus telling me to call this number, you know, on the popped up page. And then I talked to a foreigner and I don't know if I could have trusted him, so I hung up on him and shut my computer down, and it came back up in a way, and so I listened to him the second time, and it don't seem like a bad virus, but it told me to delete a bunch of emails that I had today. I don't know why he told me that, but we'll see. I can't trust anybody anymore. It's hard. Especially with all these spam calls that I've been getting. He calls me up and then it says spam, and I'm going, fuck, am I getting took here? So I'm going to get on out of here. Yep, that's correct. %, pop-up page with a voice message. Are you saying that could have been false? It had me freaking out. Well, I'm going to get out of here. I got to do a little bit of laundry and go get a prescription. Punk, thanks a lot for your help today. Magnificent. Chris, Randy. We'll get back at it again tomorrow. Rob. Yabba dabba doo. YouTubers. You're looking for, all right, Johnny Jack.